Sebastian, I have one word for you, 1994. What are we looking at in terms of a potential repeat or echo? What might we have learned from Alan Greenspan's activities that year?
Well, 1994 was remembered by some people in the markets as Hurricane Greenspan, and the reason was that he hiked rates in that year, not in a predictable, smooth way, 25 basis points every other meeting, but sometimes he did 25, sometimes 50. One time he did a 75-point hike at one meeting. So it was the unexpected delivery of those hikes which spooked bond trainers. Michael Steinhardt, a well-known hedge fund guy, lost 30% or something. Other hedge funds blew up completely. So that was the moment when the Fed really disrupted bond market traders, but actually created a smooth landing for the real economy. And maybe there's a parallel in that.
That is potentially one of the reasons why Fed communication changed so much over the years. But now you make the point that perhaps communication and how calm it is what maybe spooks markets.
Yeah, Vonnie, I think the main problem in the economy right now is you've got one interest rate that's appropriate for the real economy, for jobs, for investment. And that's a fairly low interest rate. Inflation is still below target. On the other hand, financial markets are priced to perfection. And so that's a bit scary because they could fall and disrupt things. So you want to discourage financial speculation and bubbly behavior in markets, and on the other hand, not snuff out the real economy. So I think delivering gradual interest rate hikes, but in a less telegraphed way, in a more surprising way, sometimes being willing to spook leverage traders, so that if you're short something and then you're doing a carry trade, you could lose money because the short interest rate spikes against you suddenly. That uncertainty in markets might actually be helpful.
That parallel with 1994, some say we're facing, not the same circumstances, but we're certainly facing a bond bear market, and it's going to be quick and it's going to be fast and painful. Do you see that?
I think the market has a sense now that it's a one-way bet. Rates, we can debate how fast they'll go up, but we don't see them coming down again. There's the pressure, as you were saying at the beginning, of enormous government issuance. I think there's an important pressure in terms of just global asset allocators deciding that they were overweight the dollar after the 2008 crisis. And so everybody fled to safe assets, the US Treasury, and now they're kind of adjusting it to risk-on environment. So they're comfortable holding more euro bonds, more yen, and so forth. And so those things point towards rising interest rates. The question is how fast.